You're listening to the WBT Podcast with Micah Lodge. Listen to all of our podcasts at www.wbtpod.com. Stay informed. Let's get started.
This is brought to you by Lodge & Co., a business and tax advisory firm where your success is our goal. Call us today toll-free at 888-681-1518 or visit us at www.lodge-co.com and learn more about what we can do for you. Lodge & Co., your source for sound business and tax services.
And welcome to the WBT. This is Michael Lodge. I'm glad you've joined me. Here in South Carolina, I'm looking outside, and it is a cloudy day. And so they say we're supposed to start getting some snow starting tomorrow. Tomorrow and Saturday. Woke up this morning, let the dogs out. 21 degrees. Opened up the glass door, and there was ice on the glass door. So it was a cold morning. I love wintertime because we have so many different weather changes. One moment, it can be up to 60. Right now, I think it's about 30-some degrees as I record this. So it is cold here in South Carolina, and I like it. So yesterday, I kind of mentioned what you will be able to deduct and not deduct on your 2018 tax return. Remember, you used to always bring in your shoe boxes. I know you do. Or you kept your shoebox outside and just brought me in the receipts. But don't bring me in the shoebox anymore. Do not bring it in. Let me tell you what you cannot deduct effectively as of January of 2018. So on your tax return, you are going to notice that a lot of things that you used to do have been suspended under the new tax rules. Example, we'll just go down some lists, okay? Keep up with me. And if you fall asleep, I'm sorry. It's taxes. I understand. It puts me to sleep too. In fact, I'm about ready to nod off right now. Dues paid to professional societies and organizations. Wave goodbye to it. It's not going to be on your tax return. You can't deduct it. Home office deduction for part of an employer's or employee's home and regularly, exclusively for work. Can't do it. Sorry. Subscriptions to professional journals, tools and supplies used for an employee's work. Like if you're a nurse and you're buying stethoscopes, nope, no longer. Computer software for your work? Nope, it's not going to work anymore. Computers? Nope, it's not going to work. Union dues and expenses? Bye-bye. Work clothes and uniforms if required and not suitable for everyday use. Won't see it anymore. Excuse me. Work-related education costs. You know your CPE? Not going to do it. Won't happen. Expenses for unreimbursed travel and mileage. Remember that mileage from job to job that you used to be able to take? Bye-bye. IRA custodial fees? Gone. Advisory management fees? Gone. Tax preparation fees? Gone. Safe deposit box fees? Gone. The only people who have, also your moving expenses, gone, unless you're with the military. If you're with the military, then you're going to get some. But other than that, you've lost pretty much everything on your itemized deductions. You still have your home mortgage interest and taxes. And that's really just about it. Medical expenses went up just a slight bit, but not many people are able to take medical expenses on the itemized deductions unless they've paid a lot of out-of-pocket expenses. That personal exemption that you used to get, that $4,050, eliminated. It's gone. The other thing is pass-through income. And this is what I was talking about yesterday. How some companies, if they're running a S Corp or an LLC, they're changing it over to a C Corp because taxes at ordinary income tax rate was at if it's a pass-through, was 39.6%. Now, there is what is called the QBI, which is called the qualifying business income. So that's taxed at ordinary rate with a potential deduction equal to the lesser of 20% of qualifying business income, or 50% of wages paid. Deduction is limited for service-oriented businesses. I told you yesterday, you need. They're getting very picky on the classification of businesses. If it's an actual business or if it's a service business, it changes things in your tax return. That's why I push you and push you and push you. Please, please. Before the end of year, you've got 2 or 3 weeks left. Sit down, call your tax practitioner and go over some of this stuff with him, because it is vital that you get some of this clarified before the beginning of the year. And there may be some things that you can do right now to eliminate some of the hassles that you may have to experience when you go in for your tax preparation time. Don't wait until after the end of the year. Do it right now. I hope you understand how important this is. The other thing I want to tell you about, on the child tax credit, it was at $1,000 per child, and partially that's refundable. Only dependent children qualify. So for 2018, from $1,000 it went up to $2,000 per child, refundable up to $1,400 per child. And there's a $500 for non-child dependents. And then it phases out beginning AGI. If the AGI exceeds $200,000, begins to fade out. Single if it's at $400,000, or $400,000 if it's married, and the child must have a Social Security number to be eligible for this credit. If you do not have a Social Security, it's not going to work. A TIN number is not going to work. It has to be an actual Social Security number. So they've changed that also. Okay, so I want you to really think about this, because, the weeks are going to go by very quickly because of all the parties and all of the family stuff and having to go out and shop for the little ones and everything else. And you need to really, really focus on this. I always tell my people meaning my clients, I say, be proactive. Let's sit down and talk about this, and let's start thinking about 2019. And if there's anything we can do for 2018, I always like for you people out there in the podcast land to really, really be proactive. The more proactive you are, the more that you will be able to reduce your tax liability and understand what's happening within your taxes. I point this out again because I have this argument every single year with tax people. When you sign your tax return, you sign it under penalty of perjury, that you know what you're signing. Penalty or perjury, which means if you put false information in there, you are susceptible to criminal charges. Make that first thing in your mind, that when you sign that, do you know what you're signing? Is the data that you gave your tax practitioner true and correct? Because he can't represent you very well if you go up for audit and you have nothing to back up your number on the tax return. So I encourage you, we're getting very close here to the end of the year, and you need to do something now. I feel like a parent saying, you got to do it now. I'm not going to talk to you again. And then when you come into the tax return, you're going to hear the same thing that says, my parent told me this all the time. My mom and dad told me this. I'll give you something to cry about. Yeah, it's going to be your taxes because you were not proactive. Everybody go out. Think about it right now. Don't wait until after 2018's finished. You need to talk to your tax practitioner now. This is Mike Lodge for the WBT. I'll talk with you very soon. Bye-bye.
Thank you for listening to the WBT with Michael Lodge. Join us again tomorrow as we explore more about business and taxes. Follow us on iHeartRadio and go to our podcast website at www.wbtpod.com and listen to all of our podcasts and read our blogs.
World of Business and Taxes on WBT.
Thank you for listening to the WBT.